According to Bank of America, the traditional 60-40 portfolio of stocks and bonds, the go-to investing strategy for decades, has lost a startling 34% this year. 4 out of 10 companies on a NASDAQ composite index have had their market value decline from their 52-week highs. This might be one of the best trading opportunities of the decade, as established companies are trading at levels not seen since 2012, which is the worst performance in a century. Hello and welcome to Financial Fluence. In this video, I'll list the 15 blue chip stocks with earnings growth of 50% or greater. Let's now get going. Number 1. Disney. It's currently trading at $100 per share, but it was recently around $90 per share, and its all-time high was $197 per share in March of 2021 before dropping. To put things in context, Disney's stock last traded at or near $90 per share in 2014. Since then, the company has been reorganized and has joined the Disney Plus streaming service, which is very popular. Number 2. Meta. It's presently selling at $130 a share, 65 below its all-time high of $380 a share. Facebook, well, Meta, is getting totally demolished right now. They may have put too much money into the metaverse too soon, since there isn't much interest in it, especially among Facebook's core users who are mostly older. Mark Zuckerberg's personal net worth has gone down because Apple took over the whole market and destroyed its advertising business. Number 3. Verizon and AT&T. You probably didn't expect telecom to be included, yet here we are. Verizon's share price is currently $35, which is less than its all-time high of $62 per share. AT&T isn't faring any better, with its share price currently trading at $17, down from an all-time high of $44 per share in 1999, or even a recent high of $32. With individuals spending more time online than ever before and investment in digital infrastructure skyrocketing, it's vital to remember that both Verizon and AT&T are dividend-paying equities. Number 4. Starbucks. Starbucks is currently selling at $85 per share, down from an all-time high of $126. It's safe to presume that this is the only stock on this list that isn't trading at less than half of its ATH. We should put our money where our mouths are, literally. Number 5. BlackRock. Currently, the stock is trading at $572 per share, about where it was in January of 2017. To put things in perspective, just 1 year before its all-time high, the share price was $971. For those who do not know, BlackRock owns nearly everything. This is where it gets ridiculous, since the entire global economy is valued at over $100 trillion. That's how much money is made in the whole world, and BlackRock manages assets worth more than $10 trillion right now. They own stock in almost every major firm and have a presence in every country. Although we are huge supporters of the cryptocurrency ecosystem, Goldman Sachs and Morgan Stanley both advise looking at alternative investments to rebalance your portfolio. The greatest hedges are raw resources, cryptocurrency, and art. But let's face it, you aren't going to start purchasing copper. The last frontier is luxury art, and the data is encouraging because Morgan Stanley reports that even in 2022, despite the historic losses we've been discussing, the average price of fine art is selling for a larger percentage at auction than this time last year. But how can you invest in art without spending millions of dollars? Masterworks are used. Instead of investing in NFTs, Masterworks lets you buy art by famous artists like Picasso and Banksy. They divide the paintings into shares so that you can buy a piece of a high-end piece of art and get a share of the money you might make when it's sold. A recent painting sold by Masterworks brought in an astounding 21.5% net return, or more than $18,000 for every $15,000 invested. Number 6. Adobe. The current share price is $318, a 53% decrease from the all-time high of $688. Adobe's acquisition of Figma for $20 billion generated quite a stir. Adobe traded at this low price many years ago, and since digital work is growing, we think the company will continue to lead the market, especially among professionals, even though AI design tools are becoming more popular. Number 7. Airbnb. It's currently trading at $112, with its all-time set at $120. Airbnb is a terrific company that will need to evolve. Airbnb or Google have the best chance of developing a terrific travel app. And before we continue, don't forget to subscribe to the channel. Hit the like button and turn on the notification bell to be notified every time a new video is uploaded. Let's return to the video now. Number 8. PayPal. Now trading at $87, down from an all-time high of $308. PayPal is now behaving strangely. We say this because it's a hugely profitable corporation that made $25 billion last year. But it's being obliterated by the market because of gross fears. Number 9. Intel. Currently the price is $26.50, down from its previous all-time high of $68. Even though Apple has stopped using Intel CPUs, Intel's decline is a bit of a surprise since their sales have gone up by 20%. However, rumor has it that they are having issues with their latest chip. We'll simply have to wait and see, especially in light of the fact that Intel has been losing market share to chip rival AMD. Number 10. Shopify. It's currently trading at $34 per share, with an all-time high of $169 per share. Even though Shopify's sales have been going up every year, 2022 has been a hard year for the company. From an outsider's point of view, they rule the small business e-commerce market, which makes up 10% of all e-commerce in the United States. Number 11. 3M. A B2B approach helped 3M, a US industry giant that manufactures over 60,000 consumer goods, become one of the most prosperous businesses in American history. Its shares are currently down more than 50%, trading at $122. Number 12. Nvidia. Currently trading at $131 per share, or 60% less than its all-time high of $330, as China's need for hardware goes through the roof. Nvidia will become a major player in the AI space. Right now, the company is essentially building up its resources. Number 13. Atlassian. Atlassian is the company behind Jira, Trello, and Confluence, which are tools used to organize workflow. Presently trading at $198 per share, with an all-time high of $458. This is one of those odd examples where, despite the company's improving performance, the stock continues to fall. They'll make just under $3 billion this year, and we're positive about B2B SaaS solutions. Number 14. Block. Shares are currently down at $60, down 78% from their all-time high. In the US, one of the biggest payment processors is Block, formerly known as Square. You can usually tell which establishments are using Square hardware when you pay with your phone at the register. Number 15. Peloton. The stock is currently trading at $7.81 per share, a 95% decrease from its all-time high of $162 per share. Now, you're wondering if Peloton is still around. The answer is yes. The company was overvalued like crazy while we were all stuck inside our homes. And it certainly isn't a blue chip pick. But the interesting thing is, the company didn't die. It is astonishing to learn how many of the 2.76 million subscribers still use the platform. Looking at the performance, there is still plenty of value in the company, and more strategic partnerships may be on the horizon, especially in the B2B space. It's rare to find a stock down 95% that is still fighting for survival, so it could just be one of those crazy bets where you either make a killing in the long run, or Peloton eventually gets acquired by someone like Apple for pennies on the dollar, and integrated with Apple Health. If you were to pick 3 of them to invest in, which ones would you pick? Let us know in the comments below. I hope you enjoyed this video. If you enjoy similar stuff, check out my other videos, and if you like it, hit the like button, subscribe to the channel, and turn on the notification bell, and I'll see you in the next video.